Property taxes on vacant land. What buyers get wrong. You can buy what you think is the perfect piece of land, and your costs can unexpectedly double overnight. Not because of interest rates, but because of property taxes. So we've covered so far land division, road access, zoning, utilities, physical constraints. Now we're at the final layer, how ownership actually behaves after you buy. Most buyers look at the current property taxes and assume that's what I'll be paying. They look at what the current owner is paying and assume that's what they'll be paying. And that's almost always wrong. Number one, tax uncapping in Michigan. In Michigan, property taxes are capped while someone owns the property. When the property sells, the taxable value resets to the market value, and this is called uncapping. Number two, what that actually means. You might see current taxes are $2,000 a year. After the purchase, that may jump to $35,000 to $4,000 or more, especially with waterfront, vacant land, undervalued, long-held parcels. That's where I see it most pronounced, is in those undervalued, long-held parcels. If a parcel has sold recently, has a strong sale history, then you've had a series of uncappings. But in those parcels that have been long held by the same family, tax capping has kept those property taxes lower. And so when you buy it and that uncapping happens, you're going to see quite a jump in your property tax obligation. Number three, vacant land is often misleading. Vacant land is frequently underassessed, held for decades, owned by families long term. So the gap between current taxes and your future taxes can be massive. Number four, and this can be a huge one, is the agricultural classification. Again, if this is applicable, some parcels benefit from agricultural exemptions, special use classifications. These can reduce taxes significantly, but they don't always transfer. They can be removed, and they can change based on use. Number five, special assessments. Taxes aren't the only cost. You may also have road improvements, sewer expansions, utility extensions, or you might be buying vacant land within a drainage district and you may have an assessment coming up as part of that drainage district. Special assessments. These can add thousands of dollars per year, or large one-time costs. I've seen buyers budget for a purchase, budget for building, and they completely miss the tax increase, which then changes their holding strategy, their build timeline, the investment viability. Before you buy land, you need to ask, what will the taxes be after purchase? Has this property been uncapped recently? Are there any special assessments? Will classification change? Call this the tax reality shift. Not what are the taxes today, but what will ownership actually cost me? If you have followed this entire series, you now understand, as it relates to vacant land, can you split it? Can you access it? Can you use it legally? Can you support it with infrastructure? Does the land physically work? And finally, what it costs you to own. That is how you evaluate vacant land properly.